Good morning and welcome to another edition of the OFX Currency Couch. We'll dive straight into our expectations this week for the Australian dollar as relatively muted trade yesterday thanks to public holidays in the US, Japan and Canada meant very little price action, and we opened this morning at 77.60 US cents. We've broken a key support threshold now at that 78 mark through last week, and now we're poised and looking at new technical supports around that 77.30 level at present. The key movement going forward will be whether we see a break below that threshold, as we've started to see a shift in that sentiment for the Australian dollar. Lower lows and lower highs have indicated that perhaps those bullish runs that we've enjoyed since July are coming to an end, and the reason behind that has really been renewed optimism in the US dollar. Suggestions of tax reform in the US are now back on the table, and we're beginning to see a December rate hike firm as a distinct possibility moving in towards the end of the year. Now, without looking too far beyond that, we'll be focused primarily on key US macroeconomic data sets throughout the coming months as to whether the Fed can, of course, deliver on that rate hike and whether we see the US dollar recoup those losses that it suffered throughout July and the Australian dollar reverses those 6 or 7% gains. At this stage, we'd want to see a move below that 77.30 handle, and we'll be looking this week to the Federal Reserve's FOMC meeting minutes on Wednesday, moving into key inflation data on Friday and retail sales as well as perhaps catalysts for a push below that threshold. Of course, for more analysis, you can call our dealing teams on both our corporate and private desks.